Good evening. This is the Elliott wave update for the NASDAQ 100 and the S&P 500 for Monday, September the 25th, 2023. Market actually performed pretty much on cue to what current analysis was showing. As I left it yesterday, I was looking for a small finish up to the minuet wave 5. Got that just before the opening this morning, and I marked it a 5 and then put the minute 3 underneath. This puts us in the next step, which is, of course, is a minute 4th wave. And so I've added here on the NASDAQ, I've added the Fibonacci, the ones that are going to actually come into play. So I left off, 0.786 and the 1%, et cetera, et cetera. Due to the fact that if it gets up that high, it's not a 4th wave. So again, there's wave 3, looking for wave 4. We've pretty steady climb today, a couple of turns here and there. So, but what it does, it could appear to be doing, is we got the A, the B, and a 1, 2, and this is a 3, a C, 4, and a 5. Get it up to 15,003, which would be first resistance. It's been dealing with the moving averages pretty much all day. It took most of the day to actually boost and get above this 50-period SMA, which was at 4,900. But when it did, it just kind of blasted and went up an additional 35, 40 points. So all good, though. And now we're getting stuck at the next level, which is the 50-period EMA, also on the hourly chart. A break there should give us that extra little boost, get up to 15,003. Now, whether they really want to do that in the next 25 minutes or so will be, leave a lot out there. What they're loading up on or why makes no difference. The fact is that they are doing it. And so we continue to have resistance here at 15,003. Fib, that's fib resistance. We also then have just what Elliott always told us, is that a 4th wave, we usually find its terminus or its endpoint within the price territory of the 4th wave of 1 lesser degree. That's right here. Now, we've already cleared all of this, and now we're sitting right in the top portion of it. So it should continue to find resistance from where it is right now, which is about 55. And let me just double check. Yeah, 52 to 55. And then all the way on up to resistance at 15,022. So we have the fib resistance of 15,003. And then we have continued resistance just below and now above at 15,022. Now, that would be the 4th wave of 1 lesser degree. Now, the other way that we can look at this is that it's an ABC up for A, we get a B, and then we get a 5-wave C to make it nice and clean. And so all cards are still on the table. Everything is still a possibility. And we may just see tomorrow where we have basically an inside day. We've gone down, we've completed. The only thing that really could trip this up is, I'm sure some of you are noticing, the bond market. The bond market took a serious dive lower again today. And this is after really declining pretty hard most of last week. And today, I mean, they rallied on Friday. But let's take a look at it. The 30-year bond rallied on Friday, hitting 117. And today it's now breaking below 115. And these are upticks. These are upticks at 114, 27, 28. And just real quick, folks, because I think this is important that we really pay attention to these things. The low, here's the decline. Here's Friday. This is overnight and today. That is huge in my book, huge decline. And the low is 114.22. And right now it's 27.28. So a little bit of an uptick as we also work into that secondary close. And it's now gone through support, which could have stopped it. But here again, this does not appear over, and likely just finishing a minute third wave. So we have a minuet third wave. We now have a sub minuet fifth wave in progress. And the next level where it should find additional support for minuet wave 5, sub minuet wave 5, excuse me again, is 1.618, and that's at 114.03. Could get there, then still looking for a bounce in a minuet third wave, which is up here. So this, minuet fourth wave. Jesus, I'm really having trouble with my words today. A minuet fourth wave. And so wherever it ends, then we're going to bounce back up. And here is the price territory of the fourth wave of one lesser degree. So we're all in there. And that kind of goes from 115.21 all the way back up to 117. So should be a decent rally back again. But still additional downside. Ultimately, these are levels. These are serious levels for the 30-year bond to reach. And that's going to drive, that's driving the interest rates higher. So just a fact. How hard do they want to play into this? When the market really is already walking up, quote unquote, that wall of worry because of interest rates, because the Fed is very clear that they will raise again. They gave us a pass. But that leaves the October meeting for the next boost. Is that what's going to happen? I would think that they're not going to walk away from too much more. We still see a lot of things. We got that, and how interest rates and everything else are really going to start to affect earnings. So we got a lot going on that people are going to have to start factoring in, regardless of firms like Morgan Stanley coming out and saying, hey, we still love Apple Computer and we still have a $215 target on it. I was like, okay, when? Next week? Next year? Longer term? So they never tell you that. In any case, back here at the farm. So I do think we should have continued upside, as we are now seeing, as we work our way into that close, which comes at the top of the hour. And again, we're going to wait and see if that is all of what we're going to get. So it's an AB, and then we got the C wave. Put a 4 up there, or shall I expect more? In which case we're going to start breaking additional levels. I believe this is the 100, and it's just, it is, and it's the wrong color. I don't like that color. I want it to be this color. So the 100 period, the hourly, and that's an SMA. That's at 15,070. So we have 382 now. Most common for fourth wave is 0.382 of the decline. And that's up here, 15,140. That's if they really want to get excited. Again, pressure, or just the way a lot of the underlying are trading. You know, they push Apple to 178. They push Apple back to 180. That's going to lift this whole market. It's going to lift all the markets because it sits in all of them. So again, yet to be seen. There was plenty of opportunities actually both ways today. The cleaner ones came to the upside, but if we were following good Elliott, we were expecting those upside moves, and so they were easier to get in and hold on to. Is my point there. So I'm going to leave that there. Moving averages all kind of staying in line, and they still remain lined up for downside action. No changes on the daily with regard to those moving averages. And so here as well, we got now the 20 breaking below the 50 on the daily, which, you know, just keeps it in alignment. There's the 4, the 8, the 20, the 50s, and the 200s are down here starting to go flat. So daily still, next step would be, and it's going to take a while, I would think, that we get down and we start breaking that level. All right, over in the S&P, same story basically here as well. They're rallying a little bit harder into their little bit of a close here. And again, you know, I can't tell you why, you know, it could be a lot of, you know, they're like, hey, I don't want to be short that much. And you start, you know, go get some deltas, go buy a few futures, go buy, you know, cover your deltas in the futures market, go home flat, et cetera, et cetera. You got trade managers who are talking to their desks. So lots of stuff happened in this last few minutes that we have. So same as in the NASDAQ, could it be A, B, 1, 2, 3, 4, 5? Yep, could be. Let's review. Minuet wave 2, minuet wave 3. Was it beautiful? All the way down, gorgeous. Third wave. The third of the third extended beautifully. Several times, as a matter of fact. Could have ended there, could have ended there, did end here. And then we went into a 4 that took us through Friday. And then we started to come back down. And then we rallied back up yesterday. So this was the close on Friday, put us at a new low. We rallied yesterday during the Globex session. And then once Europe opened last night, bam, bam. Put in that additional low. So this ends up, just so that you can get a firm look at it, right? Remember I was showing you this? 1, 2, 3, 4, 5. And, or, you know, 1, 2, 3, 4, you know, we're not going to go on length of waves on these little ones, but they all work. And I'm going to put it down as 1, 2, 1, 2, 3, 4, 5. And that's on the hourly. I could break it down even further and get a little bit more, but it does work. And then we get that A, B, 2, 3. Now we're kind of looking to see how that all wants to come out. Go back to the candle. That's what we trade off of. So again, fourth wave. The high of the fourth wave is just at 4,399. We're now heading up to that we can start to challenge the hourly 50-period EMA, and that's at 43.84. And then once that breaks, we have fib resistance at 43.92. And then we basically have the previous fourth wave topping out at 43.99. And then we're heading up towards the 100-period SMA, the simple moving average, at 44.19. Again, as these break, you would likely expect a little bit of a jump, but that's just below 382 resistance, which is the most common area for a fourth wave bounce. So again, with everything stacking against a continued stronger buy, I think that we're going to get possibly up into here, but I think we kind of get caught up inside of here. And then we just start to work our way lower again. And we will wait and we will see what the market wants to bring us. So let me clean this one up like I did the other so that we can see what that looks like, because it gets those upper ranges out of the picture. I would not consider them. I would not consider this a fourth wave if it ends up going all the way up to here. It would force me to go look at the whole pattern. And again, someone will ask, well, what is your alternate? It's going to be a little bit challenging because I'm still very convinced that it's a 1-2 and we're working through a third wave. Everything is falling into line. The look and feel are very clear and very clean. So I have no reason to believe that this is going to be an ABC. I did see somebody had, marked it as such, but it's what they were labeling here that just didn't make sense to me. And actually, this doesn't make sense. Although you can say, oh, look, 535. And now we're rallying. It's like, okay, that part I'd have to say yes to. Right? 5, 3, 5, 5, 3, 1 ABC. So again, a 5, 3, 5, that's a push. An ABC is not. So even if we're looking for a 5, 3, 5, and they're going to stick a C wave onto this, there's got to go up and still got to come back down because the C waves are always 5. And right now, this is 1, 2, 3. So in that respect, let me just say that both don't fit perfectly just yet. So if it could be an ABC, but it's a 5-3-5, this was a 5. This is a 3. So it's a 5, a 3, and a 5-3, a 5-3-5. So again, corrective all the way down. And so I'm looking for the move. Here, we continue to have that resistance coming off, excuse me, the support coming off at 43.13, which is going with the minor. So we should find some there. Again, let me just flip out to the daily. We can take a look at that. It actually was on the weekly, but here we have it sitting right there now, cresting and coming in at 43.29 or 43.30. So we have that level today, which was 38. We have this down at 30. You see, they could get it closer, and they just bought it up straight off of that. And thought, nah, if you go down and touch that, you're going to get a kaboom. And we're going to break 4,300. And I guess someone decided that not yet. So they turned it around and brought it back up to finish the day with a tail, but still green. And that saves right now the daily 200, which remains at 43.30. And then we have that's the EMA, and we have the SMA, the 200 period SMA at 43.06. And then we have additional fibs if it kicked in, but these are going to be for the minute 3. And so I need to actually remove this one because minute 3 is in. So we no longer need that one, and then we'll be redrawing new ones to fit where things are. And I want to make sure that what I got going on is once this is in, see, I also took away the 4th because it came in. That's done. So the minuet wave 5 was put in and completing the minute 3rd, and now we're in that minute 4th wave. Once it's complete, I will be bringing this minute wave 1, the fibs, and all of wave 1 is connecting it to wherever minute 4 taps out, and then we're going to get a new set of fibs for minute wave 5, and then that gets paired up with minute wave 1 as it compares to minute wave 5. So we'll be looking at the minors, right? Because minute wave 1 to complete minor wave 3. So, right, we got minute 1, 2, 3, 4. We're looking at a 5, and that 5 will complete minor wave 3. That's a 2, but minor wave 3, which will be that whole move. Right now, we know that 100% is 43.13. I'm really looking that one's going to get broken. So effectively, according to what Elliott guidelines tell us, this 3rd wave is already broken below, created a new low below the 1st wave, all part of the plan, but I'm looking for more. I'm looking for more before this 3rd is done. So 100%, where wave 3 would be 100% of wave 1 is 43.14, 13.14. And I'm thinking that we're going to come down likely into here. So somewhere in between here. So again, once I get that minute 4, I will connect here. I will connect here to there to get the 5th wave, which is going to go with the 4th. Then once I get minor 3 done, I get a minor 4, then I'll connect this to that and then get the ultimate to where intermediate wave 1 should come in. And then we're out here. 38, possible, 618, and that's going to be intermediate wave 1. So still a lot more to come. And right now, it's actually just taking, it's not like it's taking its time. It's just working through each portion. And so far, the count is clean. I am not forcing anything. It's all just kind of working out. And as each day goes by, and I'm like, okay, now I'm looking for a bounce. When we get the bounce, okay, now I'm looking for this to finish up and return to decline, and it does. So I have no reason to really change any of the thought pattern here. And so I'm going to continue to go with it. So we're going to look for this completion of the minute 4. I'll connect the dots so we can get to fibs for minute 5, and then we'll go from there. That's it for today. Our next update will be on Tuesday, the 26th. Let me take a quick peek, see if we do have anything coming out tomorrow. We have new home sales, consumer confidence for September. At 10 a.m., new home sales at 10 a.m., Case Shiller home price index at 9 a.m. So the big ones are at 10 a.m. Eastern. We have one Fed Governor, Bowman, speaking tomorrow at 1:30 p.m. Eastern. All right, that's it. Have a great evening. Next update, Tuesday, the 26th.